Each morning, real setups are broken down with entry strategies and technical reasoning behind every trade. This is today's best trade setups with Verified Investing.
Welcome to today's best trade setups. My name is Benjamin Poole, head trader here at Verified Investing. There are some movements in the stock market today. We have some stocks that are up 8, 9, 10, 15%. And there are other ones like commodities, like natural gas, that are actually dropping today. So there are a couple different setups that I have going into this morning's session. MU was a monster on Friday. I've given you a couple different levels you could possibly trade it. I actually traded that in the live day trading room, and fortunately, I stopped out of that. I did take a loss on that. However, it minimized the amount of loss I would have taken. I ended up stopping out right about $315, but this thing just continued to rise, and then it got up to $328. So I saved myself some money getting out of that trade. I wish I could say that every single one of these trade setups will work out perfectly. That's not the case. Sometimes support and resistance fail, but we're going to go ahead and go into a couple different charts and show you additional support and resistance levels, not only on MU, but some of these other charts as well. So the first one I'm going to go over is AVGO. I did have this on yesterday's radar, or on Friday's radar, $361.78, wide range red bar candle. Price action got close to that, and look at this rejection. This was the kind of rejection that I was expecting on the MU chart, but that didn't quite happen. Ended up closing as low as $347. So for AVGO, that was actually a decent sell-off. Never got to our entry point at $361.78. On a long trade basis, $329.88 is still where I'm looking with this gap in the charts, with this ultimate gap fill at $306.26. Not going to happen today. However, if it does get down there, this is a swing trade long level for me on AVGO. ORCL is another stock that we're monitoring. Now that we've got a break above this downsloping trend line, I do think that it favors more of an upside. For those of you who are aggressive, $201.99 is that aggressive level. It's too close for me. It's consolidated sideways, put in this nice bull flag, indicating that price action is consolidating right underneath resistance. So it's likely to head up to $210.57. But for me, my first shortable level is $223.14. This 210.57 level is for those of you who are aggressive and don't mind taking a $1 to $2 pullback from that wide range red bar candle. Let's go ahead and go into Baidu. Baidu was another stock that was up. I gave you two specific levels. One was an aggressive level, and the other one was a double top area. It didn't actually get a huge rejection. On Friday, I think that options X, or 0-day options, pushed this continually higher throughout the morning and then into the afternoon sessions. Once it got up there, it paused, and then this morning, it actually dropped back down to close to that first entry level for Baidu. So here's the chart of BIDU. The first aggressive level was 145.28. You did have a decent pullback. I think it was about a 1%. And then all of a sudden, as you can see, it ended up closing above this double top area. You could have gotten about a 0.5% pullback from this level. When it gets later in the day, I don't like this as far as a swing trade, or a day trade level. So I didn't enter it. Had you held on to this for some reason, you would have been in the money about 2.5% from this double top area. Every once in a while, you get these stocks that are really momentum driven, and they can close here. And then once the buying pressure steps out of the way, it can really drop the price. And that's what it looks to happen on BIDU. The buying pressure stopped, and then it allowed the sellers to come in, take their profits, and that's why it's trading at $145.56. On a day trade basis, if we get a sell-off, a continued sell-off, you're looking at this $130.69 for a day trade level on BIDU. Not only this gap in the charts, but all this price consolidation, you should get a pretty solid bounce from this. For those of you who are aggressive and are trend traders, what you're looking for is a break back above this double top area and then the buyers can step back in, you could actually go long on this and then look for a further move to the upside. I am not that kind of trader. I know some of you guys like momentum trades and chasing things. So if it breaks above that basically $150 level, it could continue to rise and go up to about $160, $170. So if that's your style, by all means, that's what I would target as far as a move to the upside for a potential run on this thing. Halliburton was up significantly. It got to a key gap fill in the pre-market trading, got a nice 4.5% pullback. This gap in the chart is still going to be a pretty aggressive level if it gets up there again with a couple different resistance levels on the way up. Let's go ahead and take a look at Halliburton. The first shortable level is that $33.24. This was that gap that it filled in the pre-market. It got above this resistance, hit this level, and now it's trading at $32.07. If it gets back up into this level, you should still get some resistance. I would only look for about a 1 to 2% pullback from this level, knowing that I've got this minor gap in the charts at $34.68. For me, this is the first level I'd be interested in trading it. But ultimately, if it does get up to $36.44, this is a really, really conservative level. Gets up to this level, you should get a 3, 4, or even 5% pullback from this level if it can get up there today for Halliburton. Another stock that we were going over yesterday or on Friday was ASML. I had mentioned that 1140.92 was a key resistance level, but if it got above that, it could go up to about $1,200. It is actually trading at $1,200 in the pre-market. So this looks like a good possible starter position for a swing trade with additional resistance just slightly above it. Here's that ASML. The first level of resistance that I was mentioning is $1,200 based on this upsloping trend line. You got this pivot top from the 14th of May, 2025, secondary pivot, third pivot. This was the fourth hit. I was saying that on a swing trade basis, $1,200 is where price action could get to, and that's where I'd enter a trade. And then in the pre-market, I was noticing that you got this pivot top from the highs of September 2021, secondary highs from 2024. So this would be an upsloping trend line, third hit over the resistance, can push price action up a little bit more to about $1,225. Ultimately, I think this is the potential top for ASML, though. Likely could push above it, but ultimately, I think we're going to get a nice rejection, at least back down to around $1,100 or just below $1,100 for ASML. If it starts breaking this resistance level, this support level right here, you could head even lower and get down to just underneath $1,000. So if those of you who are aggressive, you could wait for this upsloping trend line, again, $1,225, and then wait for a nice pullback and just below $1,000. All right, let's go ahead and go into that chart of MU. I had a couple different upsloping trend lines on MU. The one I had mentioned on Friday was $200 or $310 as far as a max upside goes. But now I have a secondary trend line that I was also mentioning. You never know which trend line is going to play out, but you have to be aware that the trend lines are there. So the first trend line at $310 could have gotten you about a $5 pullback from that level. But then once price action got back above it, the buyers were still so ravenous that they drove it up to $328 in the pre-market. Here's this level that I gave you yesterday. Super aggressive level, $300.27. This is where I actually entered the trade. Got a small pullback. And then I added every $3 higher, was slightly in the money. I was anticipating a pullback below $300.27. I could have taken about $1,000 gain on this trade, but I decided to be a little bit more patient. That patience usually pays off. In this case, it did not. It got up to $310.05, added there, and then it closed at $315.10. If we switch to the second chart on the MU trade, you've got this pivot top from the 18th of September, secondary pivot right here from the 6th of October, third hit, fourth hit, got above it. Here's the fifth hit. Resistance level now is $330.49. I will be entering another short trade on MU. This thing is way extended. So if it does get up to that level, I will be entering a short in the day trading room, looking for a $3, $4, or even $5 pullback. Depending on what's going on with the RSI, I would even potentially look for a break below 320 bucks to the downside on MU. For those of you who are a little bit more conservative, look at the $330 level as a stop out level. If it closes above that on a 15-minute closing basis, you could have another move to the upside on the chart like MU. Natural gas is another stock or another chart that we're looking at. You have this previous pivot top right here from the 10th of June, 2025. Or excuse me, 2024, you had all this price consolidation. You notice how price can get above it and then gets rejected and then gets back below it. This is a more aggressive level. But if natural gas gets back down to $3.18, this is going to be a key support level, knowing that I've got additional support from the low pivot from the 5th of August, 2024, secondary pivot from the 25th of August, 2025. This would be the third hit, which favors a move to the upside. This on, I would be trading UNG in this case if natural gas got to 318.70 with an add level at this upsloping trend line right here, right about the $3 level for natural gas. I'm also monitoring Nvidia. So you've got this downsloping trend line. For me, this is still resistance. If we can get a break above this, my first shortable levels is 199.05, knowing that I've got additional resistance at 206.97 as far as a gap in the charts goes. And I did, in my last video, I had SWK as a potential chart setup that you guys wanted me to identify some different levels for you. So what I have is a key resistance level on SWK that I'm going to go over with you guys in the charts today. So here's this trend line. I connected this pivot low from the 14th of October, 2022. Here's the second hit, third hit, kiss right here, fourth hit, fifth hit, sixth hit, finally broke down. As you can see, once price action gets up into this resistance level, it does get rejected. If price can get back up to $82.66 for me, this would be your shortable level for today's day trade. SWK doesn't have a lot of volatility in it at the moment, but again, this is my first shortable level based on this upsloping trend line. On the underside of it, this is going to be where your resistance is. For you bulls, if price action can get above this level or consolidate right underneath it, it is likely to break above it. If it confirms, you could actually play this on a retrace to go long and look for a further move to the upside. Ultimately, this is basically the line in the sand on SWK. So you got to wait for price action to confirm above that before we can get another move to the upside. All right, that's what I have for you guys. Thank you so much for joining me this Monday morning, January 5th, 2026. Gary Soloway is going to be going live in less than 4 minutes. You guys don't want to miss his analysis and this movement in the stocks going forward. And if you guys are getting something out of this, please make sure you're liking, you're following, subscribing, and share with those friends so that way they can get this market action as well. And with that said, I'll wish you guys farewell, and you guys have a great rest of your day. Take care.